Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elonin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Happy Tuesday. Welcome to Pre-Market Prep. Spencer, Joel, Dennis, we got a lot going on. We got an Apple event today. We're going to talk about ORCL. We're going to talk about inflation because we get a CPI print at 8:30. We're going to talk casino stocks. They are weak this morning. We have a shutdown in Macau to worry about now, or a weakness in Macau. So a lot going on in this market. Let's bring on Joel's charts right away. Let's get right to it. We got a lot to do, guys. Joel, good morning. How are we doing in the market?
Good morning, Spencer. We got some pressure on the December contract, down 3 3/4 handles at 55.75. I don't know if Dennis caught any of that fluff between 4 and 4:30. They jacked the spoos up another 7 points from the actual close. It really doesn't seem like the close to me, but maybe an inside day today. We're a ways away from the high from yesterday at 83.5 and 20 handles off that low with 34.50. Based on the weekly numbers, though, folks, the weekly numbers haven't been bearish in a long time, and they've turned. I don't know if it's the end of the world, but definitely we've turned on the weekly numbers. Crude's helping out the markets, doing its best, up 28 cents at 70.74. Gold repelling off 1,800 once again, down 930 at 19.85. Silver back in the middle, 23 handle, down 28 cents at 23.51. Buy the dip in Bitcoin yesterday, up 1290, 46,105. Ethereum is up $79 at 33.44.50. Triple D, what are you seeing out there?
Fast market.
Fast market. I know.
Yeah, we're moving around ahead of the CPI number. We're seeing some chop. We've dropped a little bit. I was buying stocks. Now I'm trying to sell stocks. I'm all over the place
Nervousness.
here. So.
Nervousness. I mean,
it's not it could be a moving number. I mean, we care obviously about inflation here. We've always said in the past the only number that really matters is the jobs, but it's not the truth anymore. It's now CPI. It does matter because obviously everybody's looking at where inflation is going. That has been one of the major concerns for this market for a long time.
Yeah, and we get that at 8:30, so we'll get you prepared, and you go wide on your markets. And so
you got to remind me 8:25, so I don't get picked off by all those high frequency traders.
Instead of you doing the picking off, and we'll be keeping an eye on the banks, right? on a number like this. We'll be keeping an eye on tech stocks, right? Higher rates are not good for tech stocks. Inflation is not good for tech stocks. What else? You just want to go right to Oracle being Oracle, or is there anything else you want to preview?
So. I think we might as well do the one earnings stock because it's pretty much what we have. There's actually about 3 stocks that report this week. The only highlight one really is Oracle. So let's do it.
Oracle earnings last night, EPS beat $1.03 versus a 97-cent estimate. Sales $9.7 billion versus a $9.77 billion estimate. So a little bit light on that sales print for Oracle. They are basically in the thick of competing with Microsoft and Amazon and Google for the cloud. That's basically what it comes down to. Their cloud services revenue, I guess, fell. Was a smidge light. What else did I see? Their guidance for revenue for the quarter for the fiscal year pretty much in line as well. But again, this is a company that is just having to compete with Google and Facebook, Google and Amazon, and Microsoft for the cloud. That's basically where their bread is buttered right now. So it's tough. It
seems like every time Oracle reports, and Joel alluded to this, it's like they miss. I mean, if you're buying Oracle ahead of the report, you're not looking at the stats. And maybe it's like the perception on mine and Joel's part, but I tell you, I feel like every single quarter the stock gap's down on earnings. Last quarter, absolutely no exception. You can see it back on June the 15th. Went from 82 down to 76. We always say about 3 weeks later, they forget about it and they buy it right back up. So it is the ultimate buy the dip stock as well. I don't know if you need to buy the first day. If we go and look, and obviously it's nice. We can look back at charts. It took about 2 weeks before they started to buy the dip on Oracle. Then they had the ridiculous run in July where it got it all back in 3 days. So maybe let the dust settle, but eventually it seems like Oracle dips are always to be bought. It's only down a couple bucks. I am talking my book. I have Oracle in my long-term portfolio. I bought it at $9 during the financial crisis, and I'm not selling it.
You might have been scratching your head, though, when it went to 90.30 on the headline number.
Did it go up on it?
Yeah, it
did. It's been real fast. I didn't see that.
Real quick. You had some highs. We had talked about this one kind of set up nicely on the chart. You had 90.5. Of course, didn't get there. It's pretty good resistance. And we talked about getting through this 88 area, several lows in that area, also 87.5. It did that with ease. Pre-market low comes in at 85.59. Resistance easier to spot than support here now that you've taken out the lows. So 87.5, 88. I'll go with that 3-star resistance now. And then you got a lot of daily lows in here, that are quite a ways away. So maybe wait for a double or triple bottom. The next daily low that I see comes in. Well, there's one at 85.78 and 84.66. But you know what? You got to admire this Larry Ellison. I know he's not, he's the former, but, he's not like, he's not a Musk, I mean, I know he does some things, but you just don't hear about him, He did great things and had built a great company, but, he's not telling the world what to do all the time.
Maybe he's enjoying his retirement.
I think he's focused on other things. He's
not sending people into space.
No, isn't he big into like sailing? He's like he is.
Really
big into sailing, right?
That's the way to do it.
Yeah,
actually enjoy your retirement. Enjoy a little bit of voting. Do some things.
All right, so let's stick with tech here and let's talk about Apple for a second because we do have the event. It's 1:00 Eastern time today, 10 a.m. Pacific. We will be restreaming the event on our channel. At least that's the plan for now. Basically, Gene Monster called this the biggest day of the year for hardware. That's kind of how it always goes here with Apple. We're looking for new iPhones. We're looking for new AirPods. We're looking for potentially new iPads. And we're looking for an new Apple Watch. Those are kind of the 4 things that we're looking for. We're not looking for new Macs. That's laptops are like their own event that Apple does. So it's kind of the biggest day of the year for Apple, right? Because this is where their bread is buttered. is the iPhone. Even though the other parts of their business have been their higher growth areas for the last couple of years, the iPhone is still the king. And so we're looking for nothing too groundbreaking on the product side, just maybe a slightly different size, or remember last year was the rollout of the 5G phone. That was huge. So nothing that big this time around, but still big because it is the iPhone, still the biggest product in the world. Everyone has one. Watching Apple closely today. Wouldn't expect them to comment too much on like anything else being, the Epic lawsuit, right, that Apple mostly won and is now being appealed. Wouldn't expect them to talk about like App Store economics or anything like that. This is just a product day for them.
Yeah.
So
not going to be an overall update on the business here.
No.
That's
but again, 1 p.m. Eastern, watching Apple suppliers as well, like Taiwan Semi, into the presentation, and we'll find out, what the new phone is, where it's priced at, and all that stuff well, we have some guesses, but I don't like to say the guesses because we don't really know. So we'll find out in a few hours.
All you can say, it's impossible to call these things on the event. Market sentiment is going to matter because we're going to be chopping around. We've had some more volatility the last few days. Where we are at 1 o'clock when this event starts, I'm assuming it's 1 o'clock, right, Spencer?
Yep.
Where we are in the markets is going to matter a lot too. If we're rallying, maybe we get some numbers, CPI, maybe we rally, then, you think there may be looking to buy the dips on something's there. If we're selling off, people will be looking to sell the rips. Like, it's not just me that does that, it's the whole world that does that. So market sentiment is actually going to matter here where we are at 1 o'clock, because, if we were in a nothing doing market, I would say that wouldn't matter, but we're not in a nothing doing market anymore. We're starting to pick up volatility significantly here. So let's see where we are. The CPI number is going to matter, and that's going to matter what the response to Apple is. Secondly, is you do have a perfect double bottom from yesterday, 148.70, 148.75. So that's your major support. Obviously, if that gets breached, I start thinking about the 145 level. On the upside, all the way up to 155. Joel, I took all your technicals from you, so we don't even have to talk the stock.
No. We have entered a new dimension of pre-market prep.
I'm the technical analyst, and you're the arbitrage trader.
Close. No. Are you looking at the chart?
Yes.
What do you see there?
I see a line where Joel can now draw lines.
No, I can draw. No, that's
dotted lines.
That's better than a line, Dennis.
What is it?
We're going to stay here until you figure out what there is there.
Little stars.
Yes.
Stars. They're so small. I got to get my glass. I got to really look closely there, but they are little mini stars.
I am not going to go with the font right now, but you did okay. I'll give you an A- on that technical analysis. 2 lows, 48.70, 48.75, but you had another low at 48.61. Going back on the 30th. So that is the level of levels.
Super duper major support.
And you know what? This is the last time on pre-market prep I'm going to show stars. But I just wanted you guys to get a glimpse. This is a glimpse of what you get on pre-market prep plus right there. That's a glimpse. So I'm going to take these off right now and we can move on. But that's a big level and we're not bouncing. Just overall market. We have these big breaks off the high. We've had a little bit over 100-point break. And how many times have we had like that 100-point break and then we take 50 back right away? And I think, okay, this is it. Come to pop up, 50% retracement. We're going to have another 100-point move down. And then we blast the new all-time highs.
Yeah.
This time,
unpredictable.
We're not bouncing. We're not getting the bounce of bounces. I don't know if it's the quad witch. I don't know if it's Apple pressure. I don't know what it is.
Well, it's exactly the big guns. So it is Apple pressure. I mean, look at the SPY chart and look at Apple chart. They are really close to the same thing. You can bring up Microsoft, kind of the same thing. Even Tesla falls into that realm now.
Do you want out of the Microsoft bet?
No.
Okay.
No, I'm not getting out of it. But obviously the market is not looking as healthy as it once upon a time did. So.
Okay.
All right, so let's move away from earnings, tech, and let's move into the big story of the day, which is China pissing in another industry's pool. And we have it now, the casino stocks getting nailed. Spencer Israel, what is the headline that is hammering by Las Vegas Sands?
There is a COVID lockdown in the, I hope I'm pronouncing this right, Fujian province, where 22 new cases were linked to a single person. We know that China is really, really quick to pull the trigger on a lockdown. It's like this is like the third or fourth one that they've done, at least that I can remember, probably more. So there are now there are concerns now that the recovery in Macau will hit more speed bumps. And remember that Las Vegas Sands is really only in Macau right now. That's the core of their business. So there are concerns about the recovery in Macau, and if China's going to keep doing these dramatic lockdowns.
And I wasn't even referring to that headline. I'm referring to this headline where
what you're referring to.
You've got Macau sending government representatives to supervise casinos. So, reports of Macau wants government representatives to supervise casino operators and to increase local ownership in gaming companies.
Oh, okay.
So they're coming in here, and now, it's not just a matter of they want to go into video games. Now they want to obviously go and check that out too, and the physical casino gaming. So this is why Las Vegas Sands, coming in today, is trading down 6.71%. It is not a pretty sight. Thank goodness I sold half of my position and took half of the loss. I sold it up at 44. I wish I would have sold the whole thing and just ate the entire loss, but I was like, I'll hold a little piece. Shouldn't hold a little piece. It gave you a nice rally. And this is, and you're managing losing positions. Sometimes you look, and you think, okay, the 50% retracement of the move. So we had this big down move from like 55 to 35 or 38. Maybe that was overdone. And had a nice 7-point rally. And then it starts to stall out right around there. Well, that overall trend, you're running into old overhead supply. Me being one of those bag holders, I had in the long-term account, but I'll start cutting the long-term losers too when they give me a chance. And, I bought this thing around $53 or $54. Maybe it was even 55, but I was willing to eat a 10-point loss because it's better than a 17-point loss. So, you got to be willing to take some losers. Should have sold the whole thing, just like I should have sold my whole Alibaba too. But hindsight capital, once again, 2020, I got a small piece of LVS left. Not pleased about it. I also have in my day trading account a pair on Las Vegas Sands versus WYNN, but that's a pair trade.
What was the name of that city that was locked down again?
Fujian.
Is that where they make Fuji bikes? Remember Fuji bikes from a long time ago? My sister had a Fuji bike. It was a top of the line bike, but I guess not. These stocks these reopening stocks just are not acting well. Before this, anyways.
We've talked about this for 2 months.
I know. I mean,
like it's for real. The reopening trade, the great reopening trade, wasn't so great. We can officially say it wasn't so great. You can look at your casinos, you can look at your airlines, you can look at your cruise lines, and you're like, what the hell happened? Delta happened. So I know people say, I don't want to talk about Delta anymore. You know what? If you're trading stocks, you got to talk about it, because Delta is the whole reason that this great reopening trade turned out to be not very great.
Yeah.
And Royal Caribbean holding up though a little bit.
Is it holding up better?
A little bit, yeah.
Yeah, it's holding up better. I'd sell it.
and the thing about, and we said this a couple months ago now, it's not even the reopening trade, it's the reopened past tense trade, because we've been reopened. It's over. It happened.
It's not great for a lot of stocks. It
happened and it's done. It happened and now it's done. We already reopened. We spent the spring reopening.
We had the great reopening trade. It was great in the first quarter of this year. I mean, look at some of the moves, and even into the late, after the vaccines announcement. I mean, there was some huge moves here. I mean, really, even looking at the airlines and going out to the weeklies. I mean, we went on American Airlines from $11 up to $25. It got back the majority of the losses. This is how dumb the market is. This is how dumb the market is. American Airlines was like $28 when the crisis started back in 2020. It goes down to $8. Comes all the way back to 26. Who's paying 26? I mean, think about, are you in as good a shape on the airlines as you were before a pandemic ever happened? Yeah. Hell no. The business traveler ain't ever coming back. Not like it was. So if you're paying $26, $27, you're basically saying that COVID doesn't matter at all anymore, which is absolutely not true. Delta, same story. 60, 58 bucks, got up to 51. Gave you all the money back in February, March. All the money back. And you know what? Now, would I want to own them now? No. Because if we believe the fundamentals matter, and I know in some stocks they don't, and maybe in the entire market it won't matter. Maybe we're just going to blast off because fundamentals won't matter on anything. And that can very well happen because it happened in 1999. But if you are still looking at, fundamental analysis to a certain extent or looking at headlines, I mean, yeah, you have some positive headlines that could happen. Maybe we get ahead of the Delta. But until you start seeing the light at the end of the tunnel for COVID, and maybe you are seeing that, but I'm kind of just seeing it just meander. It's like I have certain people saying to me, this thing might never go away. And it might not. But even if it does go away, even if we get rid of COVID, is the business traveler going back to the way it was before? No, because they found out that they can work from home just as efficiently, and these companies can save a lot of money. So even if you get rid of Delta, the airlines going back to where they were because business travel is a huge chunk of the revenue. Probably not. So I don't want to own any airlines. 0 airlines.
The question from Scott is, would you short them here?
Well, that's a scary. You can put on any trade as long as you know where your out is again. So if I'm doing American Airlines and I'm looking at this, it's an ugly downtrend. You're right at support though too. So you're shorting it now. It was 26 bucks, 27 bucks in June. Can it go to 15? It could, but even if it went to 21, you're still kind of in a downtrend here. So where do you put your stop? So where do you set up your risk? You can say, oh, I think it's going to 15. I'm all excited to sell 1923. But where are you going to call yourself wrong on that trade? Because that's what you got to think about first. And I think it could go to 22. You might still be right because the trend's still there. It's still below the resistance. So now I've got to give it up to 22. I'm going to give that thing 15, 20% against me? No. So I move on to the next stock because I just can't control the risk as well as I would like to. So I would not short the stock here. But would I be long? No. I think it's more of a coin flip at this point in time. It has a lot of bad stuff priced in, but is all the bad stuff priced in? Hard to say. So
what was the trend in airlines before COVID?
Down. Right. They weren't good either, even before it started.
Even before it started,
in secular decline.
And I've said this before. You guys probably tired of hearing about it. I mean, human behavior is going to be altered for a long time, if not permanently, right? I mean, people are going camping. People are doing different things. Air travel, until they start getting
I went camping. I've never went camping in my whole life. I hate camping. It was actually okay. I went camping. I don't go to camping. I go to hotels. I enjoy myself. And I fly and I go to resorts. I don't go camping. I went camping. You know what? It wasn't bad.
And you got sick.
I got sick. We all got sick.
No. I mean, I just think the behavior is permanently changed. I mean, also you look at another factor of crude oil prices, which is a big component of their expenses. That's been on the rise lately. I know some of them hedge. And did you see? And someone mentioned this in the chat. Southwest is not serving alcohol anymore.
Well, that's just because you see these unruly passengers. I mean, they're, adding alcohol when people are already somewhat nervous is just not the best, thing. So that doesn't help them either. I mean, That doesn't help the bottom line.
Not at all.
But, because, obviously, you get on there and they got charged you $10 for a drink. I mean, that's a nice source of revenue for them. But I get it because you got people that are nervous. People don't want to wear masks. They get a little bit of alcohol in them. They start saying stuff. We see a video of this, and most of the flights are obviously media cherry picks and acts like everybody's on. It's one flight of 3,000 flights going, and they show one flight every other day where some passengers got upset or done something or tried to hit somebody. I mean, for the most part, 99.99% of it's probably pretty good. Yeah. Was there any on your flight, Spencer? Was there any unruly passengers? Is that a
just
word?
Spencer?
Unruly?
Just me.
Just you?
Yeah, just me. But no. It's what's interesting is I've now flown 3 times in the last 4 months, and
your flying's going up.
And every flight was jam packed, like at capacity. So I think what's happening is there's just less flights, and they're fuller.
Yeah.
Right. I think that's what's happening here. But
well, for sure, because they got to try to figure out how to.
Yeah, they can't
have them flying half full. Like Delta CEO was on. He said his break even was like 70% capacity. So they can't have a bunch of flights and they're all 50% capacity, not even covering the variable costs. So they got to get the 70% going. So, I mean, they're going to have less flights. And that's why, you see these flight cancellations and you see flights getting moved on people. And you see, you bought a direct flight. Now all of a sudden it's got a connection in there. I mean, it's not as fun of an experience as it was pre-COVID. And is it ever going back to be that fun of an experience? Maybe. But I tell you, that business traveler, maybe the leisure traveler comes back with a vengeance, but that business traveler is not coming back like they were. So if I'm doing a reopening trade, I'm doing the House of Mouse. That's my.
It is. I know. I was just thinking about that. And you know what? I was going to text you. I don't know if it was last weekend or this weekend, but I saw an advertisement. What are they doing? A package. It's like ESPN, Hulu, and Disney Plus or something like that.
Yeah.
Has that been out for a while?
That's been out since Disney, since ESPN Plus launched, or since Disney.
Really?
Yeah.
Because I almost wanted to go and lift an offer on a stock when I saw that.
Yeah,
no.
That's
That's it. I mean, that's the way it's going. Okay.
All right, this is your 5-minute warning, Dennis.
Yes,
I'm going to leave you in a few minutes. So I'm going to talk for 2 more minutes straight without a breath.
So someone in the chat,
and not breathe as well.
Someone in the chat asked about what stocks we look at. We with regards to inflation, you start with the banks.
Banks number
TLT,
one,
and then you start with growth, right? Anything that's growth, techie, because higher rates makes it more expensive to borrow money in theory, on paper, right?
And the main reason why, and I've explained this a few times on the show, but I'll explain it again. The main reason why inflation hurts higher tech growth stocks is because those future earnings that you're buying today are not worth as much 3-4 years from now if you've got inflation. So this company's going to make $10 a share, while if inflation's going up at 5% a year, those $10 a share all of a sudden looks like 9 or 8 from a few years out. So earn money now is worth more than money in the future. And that's why you see the high growth stocks get hit when inflation is ramping up.
And what this also really comes down to is rates, right? Is because that's like the other side of this coin is like whatever the inflation number is, how does that change the interest rate forecast? And doesn't mean a rate hike, right? Because we've been told for the last year, this inflation that we're seeing, we know it's coming, we know it's here, but don't worry, it's temporary, it's transitory. Well, it's easy. It's hard to believe it when you're in the storm. When you're in the storm and someone says, "Don't worry, the storm's almost over," it's hard to believe them. So maybe the Fed will end up being right about this fast in a year. We don't know, obviously, but for the moment, we are in an inflationary environment. It is really tough. So here are the numbers that we're looking for. We are expecting economists, the consensus estimate across Wall Street are expecting a 0.4% increase in prices from July, month over month, 0.4% increase from July to August, a 5.4% increase year over year, August of this year versus August of last year. Both of those numbers would actually be lower than the prior month. So that's something.
One other thing, Dennis, these tech companies borrow a lot of money too. They have a lot.
Some, not really though. Some obviously, and that is a concern. But there's a lot more borrowing going on in a lot of other lower margin industries as well. So I don't think of tech as, being, these companies are all borrowing to, and there is some in the growth startups for sure. There's some borrowing, but, like Apple doesn't borrow really, and they have the debt, but they didn't need to. Google doesn't borrow. So, some of the smaller ones maybe, but I think it's more the future earnings thing that I was talking about.
Okay. Yeah. All right.
I got a protest going on upstairs here. My little girl doesn't want to go to school today.
Oh no,
it's like day 3 of junior kindergarten, and there is a full protest happening upstairs. So if you hear stomping through the ceiling here at my rental, it's because the girl, I can hear her upstairs not.
Why doesn't she want to go?
She hasn't been in a year, probably.
Well, she was there for 2 days and she got sick, literally 2 days. And she was at school for 2 days. So then she's been off for a couple days. So now she's, better. So she doesn't want to go to school.
Junior kindergarten. Who cares?
Junior kindergarten, just let her win. Let her win the fight. Okay, you stomped and you threw a temper tantrum. You don't have to go to school. That's the thing. No, we can't let her win fights.
That's what I used to do.
My wife will not let her win the fight. I'll tell you that.
All right. Well, get us.
All right, I gotta go.
Yeah, Dennis is going to lose $1,000.
I'm going to hide.
Okay. So as Dennis goes into his cave, and we'll just do that. It is 8:20. We have basically 40 seconds until the number is supposed to come out, right? In theory. So we'll give you the number, and we'll get Joel's charts up. They're up right now, and we'll just.
We got the 1 minute. Let's go crazy.
We'll just sort of watch this.
Let's go crazy.
Again. 0.4%. Month over month, 5.4% year over year. In a normal environment, this would be insane, right? 5.4%, but this is the times we live in. So anyway, we're 10 seconds away from 8:30, and let's see what the number is. If we get it. I'm watching.
It must be light. They like it. They like it. It's light. Very light number. Woo! Look at that rally.
What does this mean? Does it mean we're not going to raise rates? Probably.
Are they hitting the banks? What are they doing here? Is the number actually out yet? Or is this someone jumping the gun Hanover? What's going on?
I'm seeing 5. Okay, here we go. 5.3% year over year, which is in line. I'm sorry. 5.3% was a smidge below 5.4%. Was the estimate. Month over month, 0.3%. So a smidge light, 0.3% increase in prices month over month versus a 0.4% estimate.
Pumping. Powell was right. Look at that.
I don't know if I would go that far yet. If you look at core CPI, which just takes out food and energy, prices only increased 0.1% month over month, which that's what we're used to seeing, right? So 0.1% increase there versus a 0.3% increase, or versus a 0.3% estimate on your core CPI. So just CPI without food, without energy. Basically in line, if not a smidge lighter than expected, right? So that is by no means a scary number. That is not a scary number.
Yeah, and someone had the algo programmed on that one, and they saw that 0.3 versus 0.4, and they just jammed it. Total different complexion here in the market. We did take out the pre-market high. That was standing at 71.25. We just went to 75.5, and now, somebody's coming in, whacking a little bit. We're just in no man's land here, folks. Weekly swing number at 77.25. You haven't seen that yet, and if you want to short it or if you're looking on a daily basis, if you're looking for a target, we're 10 points away from yesterday's high at 83.50. So that's all I have for you. They jumped the gun. They bid. They lifted all the offers and ran some stops there. Maybe people were leaning a little bit short into the report, and they just got their face ripped off on that one. So here we are. New pre-market high, 75.5. You got some more.
You want to go look at tech? You can go look at like tech all spiked on that right. Apple. Actually, that Facebook chart is really interesting there. Facebook, Apple, Amazon, right? All tech spiking on this news. Again, inflation, right, eats away at profits.
Yep.
Lack of inflation, lower inflation, which is sort of what we got here. We got inflation, well, a smidge, just a smidge, but a smidge nonetheless, lower than estimates. And that's good news for tech. So you can look at Apple, you can look at Amazon, you can look at Microsoft. All tech here is going. This is now the theme of the morning.
Yeah, total change in complexion here. We're up 15 handles, big range. I still think it's really important to take out that high from yesterday at 83.50. We're still there. We're only 7 handles away. What I want to see, though, is what they did to the banks on this, right? Because you would think
they would hit it.
JP Morgan, not a big, not super liquid. Now you see this is tough, man, because they're going with the market here, right? Bank
Yeah.
America, not much though, considering the rally the SPOOs just had. The SPOOs are up. Well, the futures are up 0.3%, 0.35%, and Bank America is up 0.17. So a little bit of lagger. How's Goldman Sachs doing? It's tough. Not a lot of people. It's probably bid up here. People don't like to make markets in these higher price stocks, but well, how about how about a tip to hat to Mr. Powell then? At least based on this number.
Mean, yeah. This is an argument in the transitory column. This is a check in that column, right? We'll have to wait till next month to see if this is a trend, but technically speaking, inflation has been going down now for the past couple of months. So that's sort of what Powell's been saying. Granted, it's still high, but it has been getting less high.
The gold rallies off this. I don't know. I mean, this market just does what it's want. I think that for your people that are traded off the number or anything, just keep your eye on your previous day's highs here. I think that's very important, not only for the index here at 8350, but just look at the levels, just see how your stocks are reacting in relation, because that was a nice fluff opening, right? And yesterday, now Apple moves away from that support a little bit more, but just a general rule of thumb, just keep an eye on your highs from yesterday, and that should be decent targets on the upside.
I just want to show people like the month-over-month increases.
Sure.
This is from the BLS. This is from the government. Okay, so
wow, you're quick on that.
You can see, right? This is called a trend, right? A downtrend. We have 3 months, 2 months in a row of lower than the prior month for month-over-month inflation increases. So we went from a 0.9% increase in June to 0.5% in last month. In July to 0.3% last month in August, and so this is what they've been saying over at the Fed, and we'll see if it continues. But this is now the narrative. The narrative is that inflation, though still high, is getting smaller. It is shrinking. So that's where we're at.
All right, still pressing up here, up 19 handles. Man, 8350, that's in sight there. I don't know if we're going to be seeing triple D here for a little bit.
I'm looking a little bit down deeper into the weeds of the report just to see what jumps out to me. I'm in this August 21 column here, right? What's that? That's fuel? Fuel prices were down. That's good to see for once. Okay. What increased the most last month? Gasoline. What's that? That's gasoline. Yeah.
I guess the only, if you can get a negative out of this is that, maybe people aren't spending, right? Because spending as much, but I think they are.
No, I think they are as well. I think what we're going to see this year is maybe like a lackluster numbers in terms of retail sales as we get towards Christmas, because a lot of that stuff is going to be pulled forward, because I think everyone knows that you need to, and if you don't know, you maybe should know. They're telling you to get your holiday shopping done early, because supply chains are screwed, right? So I think we may see a lot of the holiday shopping done September, October. So we may not see that increase that we're used to seeing at the end of the year for holiday shopping, but we'll see it just pulled forward, so it's more spread out. But I do think people are spending money. There is some data to back that up. So it looks like gasoline was your biggest increase month over month. The prior number I cited was not seasonally adjusted. Biggest decrease last month was used cars and trucks. Hey, used cars and trucks prices fell 1.5%. That's something.
Okay, so we got no JC then, right? Today he's not showing up.
JC needs a public shaming, and here is why. He texted me and he said, he made a last-minute trip to Napa because the grapes are ripening fast this year. They have to do an early harvest. This is what he told me. So JC is in Napa Valley harvesting his grapes for his wine.
So is that worthy of a permanent ban?
I don't know. He said he'll make it up to me. I don't know how.
I don't know. What should we add? 1, if it's a permanent ban. 2, if it's okay that he's going to pick his grapes.
Yeah.
And they just all of a sudden, they just all of a sudden,
this is what he said.
Between yesterday and today,
this is what he said. This is what he said.
Keep an eye on his grapes a little bit. No, you see, he could have went out there. He could be out there in Napa in the fields picking the grapes. That would have been a little bit better. There's probably a labor shortage out there too for picking grapes. So
I don't know.
Let's talk natty gas.
Okay, let's talk natty gas. If you're not watching, you should. Natural gas futures hit a 7-year high, everybody. Why? Probably has to do with some supply being knocked offline, right? In the Gulf, I would imagine. I'm looking at ETFs. If you're not a futures person,
how do you get a 7-year high out of this? Because I got a monthly up here. Is that a Benzinga stat or? Because I'm looking at my monthly. Maybe with the way the contracts roll over, maybe
it's probably a rollover thing.
Okay. All right. Anyways, yep. Go ahead.
Anyway, if you're not a futures person, you're looking at stocks or ETFs. UNG is your largest natural gas. That's your most liquid one. UNG. You can look at stocks like RRC is natural gas, right? SWN is natural gas. AR is natural gas. COG is natural gas. Cabot Oil. Woo, look at Cabot.
COG. I did CBT. Wow.
COG, Cabot Oil. Wow. So, the natural gas trade is on. UNG, though, is your most liquid natural gas. That's the one that I would draw your attention to. But Boyle, Yusuf, thank you. BOIL is another ETF as well. You can go leveraged, right? But
BOYL,
BOIL, Boyle.
Okay, I mean, are we looking for are we supposed to have a bad winter or something? Is that what people are thinking?
Its demand is still high, and production got knocked offline with Hurricane Ida. So. You never really know with these storms. Like, is it going to knock production offline or is it not? In this case, it appears that it has, and now it's been what 2-3 weeks, 3 weeks since Ida. And
but there's isn't there Nicholas brewing out there too?
That's what I hear. Yes, Bob Todd. Bob Todd dropping UGAZF is another one as well. But it's been 3 weeks and we're still offline. We have another storm you just mentioned. Nicholas is lurking in the Gulf. So that's what's happened here. We have a lack of production and still strong demand, and that is translating to a rally in natural gas. FCG is another ETF.
But that's not inflationary. FCG.
Joel, this is separate from the inflation thing. This is a lack of supply.
That's true. So good old supply and demand. Okay.
Yeah.
All right. 79.50. I mean, we're holding a bid here. 77.25. We're up 17 3/4 handles. And Friday, you had the fluff open, sold. Monday, fluff open, sold. What will they do today? I mean, we got a daily target now way up at 92.50, but I'm still lurking 83.50. That's the high in the index from yesterday. Currently is 79.50. I'm sure after falling 50 handles to 34.50, a lot of people would like to see that level. I just want to take a look at some of these big tech stocks as they lead. Apple up 81 cents. How's that trading in relation? It's still a buck from yesterday's high. Let's see here. Microsoft up $1.76. If you were using yesterday's highs target, folks, 98.54 right there, right now. In fact, above it. Amazon, what did we get to yesterday in Amazon? 35.08. Nope, 34.97. That's lagging. Goog's down $9. Did they have some news or something? I mean, that's just hard. That might be an odd lot. Facebook, how's that trading in relation? 81.75. That's almost $5 off its high. I don't know. I mean, from what I'm seeing, the big stocks are not as excited about the CPI number as the S&Ps are.
And weirdly enough, I was a little bit surprised because I know you're looking at the banks and they weren't really liquid, but like the XLF did move higher.
Yeah, I mean, there's your market effect of.
I mean, TLT is down, banks are up is basically the story, right? But yeah. I got a little bit surprised in seeing that. I gotta say,
the TLT's down. Yeah, that's not making a ton of sense either, right?
Yeah, I'm a little bit surprised.
Yeah. Okay. All right. So
because I would have thought white inflation means
good for the bond market, huh?
What white inflation? But doesn't lower inflation mean that the Fed is gonna stand pat?
Yeah.
Okay, so if the Fed's gonna stand pat, then they're not gonna raise rates. Okay, whatever. I don't want to. I'm giving myself a headache. I'm giving myself a headache.
All right. Well, no, not everything.
Tom is saying no one believes. No one believes the lower inflation numbers. Maybe that's true too, Tom.
That's what you're seeing.
I don't think the market knows what to think about this.
I'm confused. I'm really confused right
now.
now.
We rallied the SPY. We're up here again, but then everybody spooked that. Well, every time we've rallied in the last 3 days, it's been a selling opportunity. I'm kind of still in the same camp, lightening up into this rally here this morning, because it worked Friday morning. It worked yesterday morning. Does it work here again? Selling the rip has been working. So I know we talk about buy the dip. We give buy the dip all the credit all the time. I tell you, sell the rip has been working very well too.
Did they lift the stocks like they lifted the SPOOs?
Not really. They've lifted.
No,
they have. I mean, the stocks
a little bit.
Come
up.
they
have to. Yeah.
But there's not like there's definitely the FANG trade came on. Apple got a nice lift here. You're seeing the banks get a little bit of a lift here. TLT, like you were saying, is down. The banks are trying to lift here a bit. You're seeing oil. It's getting a little bit of a lift. There's nothing. It's kind of everything got a little bit of a lift. It wasn't like, whoa, look at this sector or this sector. It's like everything just kind of got a little bit of a lift. So it's not one of these, like we've been talking about the rotation where, one goes one way, one goes the other. I'm not seeing that this morning. I'm kind of seeing everything got a little bit of a lift rally. So what does that mean? Well, it's good when everything's lifting. I mean, it means it's more sustainable. You're slowly seeing stocks lift up in price here too, obviously trying to chase the futures price. But am I saying we're out of the woods and we're going to, this is the time to buy? No. I think there's a lot, even though, we get a number that isn't as hot as, maybe some people thought. Are we out of the woods? Is the inflation crisis over? I don't think so.
Yeah, and then gold got a little bit of a lift off that too. Gold's
actually selling off now. So
yeah, well, it did pop. I don't know. I mean, that's the thing about relationships. They work. There's high probabilities, and sometimes people don't know what to do. It just kind of feels from what that you got the initial rip in the S&Ps, and it just kind of feels like a. I want to call it relief rally, right? After we traded off the open yesterday, after we had the bad day yesterday, after we had the sell off this morning, just like whew, oh man, I'm glad we're back in the 4470s, man. Time to lighten up. But I'm going to stick with my mantra there, and very important to get to 83.50 and close above yesterday's high. So. Still looking at a potential inside day, Spencer. 8:47. We only had one earnings to cover. I guess
we have more actually. I would let's do a couple more and then we'll do some ticker time. I would love to get Dennis's thoughts on the Walmart thing from yesterday. Dennis, I'm sure you saw it. I'm sure you saw the Walmart.
Well, it's ridiculous. I mean, this is the market that we're in. It's so headline driven, and you got now criminals putting out fake headlines. We've seen this happen before, but somehow, getting it from Walmart too, and hitting, a press release and saying they're going to accept Litecoin. I mean, or whatever they got to deal with Litecoin. I mean, right away when you saw that headline, you must be thinking, something's fishy here. You know what? First, why Litecoin? Secondly, you think Walmart's getting into crypto? There's a crypto business all of a sudden? So it looked fishy right from the get-go. But I mean, this is the market environment we're in. There is a lot of cyber crime here right now. And obviously somebody probably loaded up Litecoin and figured out this scam to release a press release, and it got a good pop. And obviously came back down, but I'm sure the criminals got out probably during the pop. So I'd be looking at who is selling. I guess I don't even know if you can do that in crypto, but there's just a lot of shenanigans that go on in the crypto world.
Yeah, I mean, I can't remember the last time we actually saw a fake press release on the wire, right? Which
we have seen it before.
Yeah, I know
it's not a common thing,
but it doesn't happen very often.
No, yeah, this was impressive. Definitely some impressive hackers getting in there to figure out another way to scam the world.
Yeah. All right. They're telling me in chat that I haven't done a good enough job today of asking for likes. So everyone, we are at 227 likes. Let's get to 500 before the end of the hour here. I think that's very, very doable.
Let's fly through some ticker time here because we are slow. Well, we're not slow. There's stuff
slow news, yeah.
But on individual stocks, we're slow. We to go back to Las Vegas Sam's when they did not rally really at all in this. So WYNN continues to leak here. Wow, that's a shellacking, those two stocks.
For WYNN?
Yeah, well, WYNN's down 8% now.
Oh wow.
So what was so China is so what are they doing? They're sending regulators to the casinos. Yeah. What would to do what? To monitor the casinos?
I don't even know what that means. What does it even mean? They're sending. I don't understand. I'm with Joel. I don't understand this.
They're going to be in. I don't. This is the headline. I mean, they're getting in there and they're now analyzing, obviously, maybe the profits and the stuff of casino operations.
So any casino with properties,
they're investigating.
So any casino with properties in Macau is going to be subject to increased regulation. Okay,
that's that what you see?
That's yeah. That's how.
Well, that doesn't sound good.
Okay.
I mean, again, it's the political aspect of it coming into an industry and further regulation. You know, like looking at companies that are making too much money and figuring out how not to make as much money. This is bad news again. So, I mean, this is just a common theme of investing in China. And you think, okay, Las Vegas Sands. And you warned me, Spencer, that Las Vegas Sands is a Macau property now.
Yeah.
It's not Las Vegas. You know, maybe they should change their name to Macau Sands. But, you know, I just look at this and think there's another area where China's coming in and looking at profits and thinking these companies are making too much money. That's what I think naturally. I don't know if that's the case, but that's what I think. So it's scary to be an investor when you have the government actively coming in to try to figure out how you are making so much money and then trying to limit your profit in different ways through regulation. That is scary.
Do you want me to go all philosophical on you?
Socrates?
Not Socrates. Do you ever see Bill and Ted's Excellent Adventure?
Is that how they say Socrates?
Socrates. I haven't seen the movie in a very long time. Have you seen that movie?
Have you seen that one, Dennis? Mr. Old Movie Quote
It's been
guy?
a long
It's been a very long time.
And I am talking years. Excellent.
Yeah, George Carlin. I mean, look what they're doing. Like they're cracking down on like the gaming, right? Kids gaming, right? And where our kids are, the gaming is out of control. Looks like they're cracking down on gambling, right? As we're opening up the world to the United States to gambling. And I think they're really like they're just trying to do like a whole cultural shift here that, it's their plan for 25, 50, 75, 100 years. I mean, I really is. I mean, I think everyone looks at these short-term things and stuff, but I don't know. It seems that there's a lot going on. I don't think it's what we're seeing right now. I don't think is the ultimate outcome. I don't think that's they're not trying to hurt the stocks. They have a bigger plan there. So
okay, anyways, I think they are trying to hurt the stocks to a certain extent in some of these.
They're trying to get rid of them.
I don't know if there is a
trying to get rid of gambling, gaming.
Everything. They are actively keep attacking.
What about beverage companies? Do people drink in China?
They don't want people. They don't want a lot of private companies making a lot of money. I don't know. It's all a scary thought. This is why I continue to be underinvested in China now.
Oh, Kathy said that she's underinvested in China now too.
I was saying the whole time, I got his Baba, but I forgot about Las Vegas Sands. And look, just quietly, I've got a half-size position now in Las Vegas Sands. I get dinged again. So fool me once, shame on you. Fool me twice, shame on me. It seems like it's going to be a new sector every single day that they're hammering. So I don't know. Baba's come all the way back down to where it was, really. I mean, we're back down to the 160 area.
Where is it? Is it back at 160 again?
It's come back down. Is this the time to come in, or now is it
was
just come
last
down too
time?
many times?
I know it's coming down too many times.
Yeah.
Oh man, it just gets
tough.
These. Come on, where is my Baba? BABA. My charts? Nope, they're not dying. Wow, back down 247 here. All right, sorry. Dennis, gold is flat now. So, I mean, it's, when it's down 8, down 5, and then it's flat, that's rallying to me. So they're rallying gold off this too. Weird. I don't know. Maybe it was
a couple more stocks on my list here. Open Door is doing an offering. This was as Dennis said, there are actually
a lot of
every single day, but there's a secondary offering. 28 million shares in Open Door. That was from last night.
Down here, huh?
Yeah, off my city. So that was on my list. Also on my list was a lot of like mobile stocks or the app-based stocks, which all kind of gave back their gains yesterday in relation to the Apple Epic ruling. So Zynga, Roblox, Bumble, Match, those guys. Also on my radar is Cinemark, which is up again this morning. CNK is up again, everybody. This thing had a great day yesterday. It is up again in the pre-market session.
Movie theater is so hot right now. It's Disney. The Disney headlines were helping them now.
I know, but it's still up is my point.
Yeah.
So
is it the next AMC? I don't think so.
I don't know.
I don't know. AMC doesn't go away, so I have no idea how to trade that. I just don't. Although I do trade AMC versus GME. I've talked about that before.
Okay, well, let's do 5 minutes of ticker time before I bring on our guests. So drop them in. And where are we at on the like front? Guys, you're hurting me on the likes. We're actually at 10.
This is how Spencer is graded.
10. So
I think we're getting an anti-like campaign.
We have 10 dislikes today.
Don't even talk about anti-likes, Joel. Can't mention.
Okay. Ticker.
Genie. Somebody's asking about Genie. I like Genie. I've said I like Genie. Mitch likes Genie. I like Mitch. I like Genie. So I don't know. I actually like this pullback. So I would be a buyer of this pullback on GENI. I have not bought GENI. Do I want to buy GENI? Yes. I had it at like 18 or whatever. I should have never sold it. I like Genie. Genius Sports. We're talking GENI.
Yeah, I got it here. I don't know. 5-point move to I'm going to take the other side of the coin on that one, and I'm going to say
we're getting another lunch bet.
Nah,
21-12.
Yeah, 21-12.
Okay, what are you proposing to me? I'm proposing that it can get up towards a 24 again. So I'll say 24. I'm giving you took the edge on me on the other one, so I'm going to take the edge on you.
I'm feeling like a
lunch.
The
edge on Microsoft, so I'm going to give you 18.
18, wait. I'm writing this down.
After the bucket of sell off.
I need to write this down.
No, I don't know about this one because look at this big red bar. I'm going to get an edge.
You guys are no fun.
How about we go a little shorter term here?
No, I don't know where it's going. I like Genius longer. I'm going out far. If I'm buying a 21 right now, I'm looking at it, I don't want that. No, I don't know. I'm not going short term because I think you go back to 20 and then you'll get me, or you go back to that low of the move 2 days ago to 1910. I like the pullback.
I like it if it can prove to me that it can get back to 21.5 and hold 21.5. That's the thing. I don't here. I'm just kind of touching it here. One, up day, down day. 21.5. That's my number for today. It's not a 9-star, but it's definitely up there. Right, SPOOs are fading here. We couldn't find a reason. We couldn't find stocks going up, right? So they have to hit the SPOOs. Darn it. All right, cancel my order. Monday's high. I knew they couldn't get it to Monday's high. Dennis, why don't you buy some more stocks?
It's not time to throw in the towel just yet, but
again, the high of the day is in.
I'm telling you, this is the market. We've said it before. You got to take your profits. You're a trader. You got to take them while you got them here because we were shopping around. There is not a hell of a lot of trend right now. If you're getting money and you're making 10% on your dip and the stock rips 10%, even like a firm yesterday. I thought about buying a firm. I was going to buy it if it got down near $100. It didn't quite get there. It got to 103, I think, or 102 or 103. And then they just turned it around on a dime and they bought all the way up to 114. But if you're lucky enough yesterday to buy a firm at $104 and it goes to 114 2 hours later, you sell. Because this is the market that if you don't take your profits, the market will take them for you. And this is just what we're in. Buy the dip, sell the rip until further notice. That's my.
What
that's
happened
my
on the open in that thing yesterday?
There was rumors of a secondary, and I'm not sure. I'm not sure if it priced. I'm not sure if it was. I just saw it flying by. They're talking secondary, and that's why the stock got hammered. And I mean, absolutely hammered. My jaw was hitting it as it continued to drop. I was like, wow. And I was saying to myself, this comes down to $100. I'm going to buy it. And it didn't quite get there. Is that still on the table for me? I would look at that low of the move now from yesterday, maybe trying that level. So looking at the 102.30 low from yesterday. It gets down to there. I might strike. Am I buying it at 110? Hell no. It just rallied $8 from the lows. So can it go to 115, 120? It can, but it'll go without me. So I'm looking at the risk, trying to control off that 102. I kind of like the 100 though.
Yeah. Okay. All right. I'm gonna let you guys take it from here, and I'll be back with you, Spencer. At
we'll talk to you at 9:30.
Yeah, I got a lot of tickers to cover. We didn't get to cover a lot today. Dennis Gold about to go over 1,800. All right. We'll talk to you guys.
All right. I have a brand new guest. I'm very excited to bring on Shana Sissel. She is the Chief Investment Officer at Spotlight Asset Group and hands down one of like the most positive person on FinTwit. So let's bring her on. Shana, good morning. Thanks for joining us today.
Thank you for having me. I'm super excited to be here.
I have to start with, let's just start with CPI here. I gotta admit, I'm very confused. I don't know what it means. Help me understand why is the market? I would have thought that the banks would go down. The tech stocks going up, I can understand, but the banks are going down. The CPI number came in a little bit lighter than expected. Is that good news? I don't really even know.
I think it is good news because some of the things that declined are things that were quote unquote transitory. So like used car sales, airfares. But I look at it sort of as, these things were impacted by the Delta variant. Used car sales, that was a combination of a lot of things, but like airfares, sporting event tickets, rental car prices. I don't know if you've tried to get a rental car lately, but they are insane.
I'm too afraid to even look, frankly.
It is so expensive to rent a car. Those numbers came down. So the food and energy was really positive, much less than expected. With food and energy, you're still seeing some inflation, not as much as expected. It's still elevated. We still have year-over-year inflation over 5%. But I think it gives the Fed cover to not do anything, which I think they wanted. And the market is positive for that because a accommodative Fed is easy money, which means equities keep going up.
That's the money line, right? It gives the Fed cover to not do anything. Let me put you on the spot here. Do you believe the numbers?
Do I believe the numbers? I think that inflation and the way that CPI and PPI are calculated are actually not great reflections of inflation. And I've had this debate in the past. I would argue that for decades we've been largely deflationary because while, the calculations for these numbers are, the traditional things that everyone buys, right? Like the big money purchases, the things that, people really are willing to spend money on, mostly technology based, have come down. And there's been so much disruption in a bunch of different markets that I just don't think that that's captured in CPI and PPI. So I think everybody here can say confidently that what the CPI number says and what you feel in like your wallet are not one and the same.
That's a great point. Inflation is so personal to all of us, right? So it's hard not to roll your eyes at whatever headline number you see, because if that doesn't match up with what you're experiencing when you go to the store, then it's like, why do I care? You're right. Yeah. Right. So, okay. Exactly. As far as overall markets are concerned, where is your head at right now? Were you one of these people, buying some puts to hedge yourself for a September correction, as people were doing apparently, or are you? Where's your head at right now as far as the overall market is concerned?
So we're longer term investors, so don't we really worry about, buying certain option contracts to hedge. If we're going to hedge, we're going to do longer term hedge with liquid alternatives or as some sort of alt contract. We do have a covered call, a buy right portfolio that we use, and we've actually sold a lot of our options because it's been advantageous to do so. Because there has been a lot of activity in the option market that allows us to, sell some of the contracts we had at huge profits. But that said, I expect September to be flat like it usually is. It's the worst worst month for the market historically. October tends to be the most volatile, so that means there will be some opportunities. But largely speaking, we're positioned the same way we have been for months, which is biased to quality and growth. We've increased value. So we have some energy in there. We have, some materials, industrials, financials, but we like tech still. I really like home builders. That's an area that we've been spending some time. Super cheap, really good fundamentals, quality there.
Yeah, so that's where we've been. Tell us more about the home builders, because for so many years after the financial crisis, it seemed they were gun shy, right? They were afraid to put themselves in the same position that they were in 07, 08 in terms of oversupply. So they didn't build as many homes, and now we're stuck with this housing shortage. So explain your bull thesis here for the home builders.
Well, to your point, they overbuilt 07, 08 because there was so much demand, and then they got stuck holding the bag when everything blew up. And the quality of the construction at that time was not great, largely because they were just throwing houses up to meet demand. I think they all learned their lesson. And so now they're much less likely to, build to meet demand. They're building to, somewhat meet demand, but they're never going to fill the gap, which is why we're seeing this crazy housing market. That and also the fact that, you can buy a house $100,000 to $200,000 more on average than you could 20 years ago and have a lower mortgage because interest rates are so low. Right. So all of those things kind of help the housing market and demographics. So a lot of people don't realize this, but the millennial and the Gen Z generation are one of the biggest demographic tailwinds to housing right now. And in the next 4 years, the expectation is to meet the demand of this generation, which, by the way, was supposed to live in their parents' basement for the rest of their lives, if you recall, never have kids, never want to move to the burbs. As it turns out, that's a completely wrong thesis, in that millennials and Gen Z are just like every generation before them. Once you have a couple kids, you're like, gee, I really need space and someplace to let my kid go outside, because it's a real pain in the butt to take them to the park every time they want to go outside. And I speak from experience on this. So, they want to get out, they want to have houses. So there's this huge demographic tailwind that is, low interest rates. And so the home builders have quite a bit of demand. There's about 1 million house shortfall in between the demand and what's out there in the existing home sales market. So builders have, demand for what they're doing, but they're not going to meet all of it because they want to stay profitable. They don't want to overbuild. And subsequently, they've been really smart, but of course, that leads to this continued shortfall in housing. What's really interesting is that home builders are cheap. As a group, they're trading at about 7.5, 8 times next year's earnings. And if you think about it, the market's at like 22, I think, or 21.5 or something like that for the S&P 500. So they're trading incredibly cheap. Most of them have little to no debt. They have growing demand for their product. And to me, this is a no-brainer. And it seems like, at least through my career, which has been 20 plus years, home builders seem to always disappoint. People always feel like they should be doing more. But home builders, as I look at the S&P Home Builders ETF XHB, it's up 32, almost 33% this year. And some of my favorite names like Lennar, up 30 plus percent, DR Homes up 29%. I mean, they're all outperforming the market. Now, granted, they're not as sexy as some of these tech names that are up, or, the meme names who are up thousands of percent, but I don't know. I'd take 30% over what the market's doing and slow and steady, and no one's paying attention at a 7 multiple.
But then the other side of that coin is I've got the XHB up on the screen is like, you want to buy it now at 76, right? When sure, a year ago. Okay, I'm with you. But
they're trading at 7-8 times earnings.
You're right.
You know what I'm saying? You can say what you want. It's above all its technicals. So, it's got technical support. Fundamentals are crazy good. Low debt, very low valuation multiples, strong cash flows. I mean, this to me seems like a no-brainer. We're talking about 76 on XHB. Show me some tech stocks and let's look at how much they've gone up. It's just one of those things where I could argue that everything's expensive right now. P&G just hit a new all-time high yesterday at $145. That's Procter & Gamble. I just think that right now, with a really accommodated Fed, easy money, strong demand, demographic tailwinds, home builders seem to me like a really interesting area of the market that I want to be exposed to.
I thought fundamentals don't matter anymore.
Well, I'm the person who argues that all the time, let's be honest. But the technicals also are supportive here. So when you have both fundamentals and technicals supportive, that's a place I want to be.
Question from our chat here. Do you like REITs?
I'm not a huge fan of REITs per se. There are certain areas, the storage REITs are interesting. I think some of the storage facilities near ports are interesting because we have this disruption and import-export because of the pandemic. I'm not a huge fan of commercial REITs, mortgage REITs. There's not a lot of opportunity out there unless you want to get into individual REITs and sort of residential. But that would be the place I'd be most interested, because residential REITs, Class A, Class B, multifamily, apartment buildings, those are really interesting. One of the areas of CPI that was moving upwards was cost of housing in terms of apartment rents. So, that's, again, a tailwind that I think will continue as a result of just demand for housing.
We're on with Shana Sissel. She is the Chief Investment Officer of Spotlight Asset Group, and as she mentioned earlier, they're long-term investors. So, Shana, let me just ask you, because as you're part of your job, you are responsible for doing due diligence and research and investment selection. What is one thing that you think that you do in your work? One part of the due diligence process that you think more people should be doing that maybe they're not?
Are we talking individual securities or are we talking managers? Because those are two different things.
Individual. We'll go individual security.
Okay.
Yeah.
Well, I think a lot of people want to pay attention to either the fundamentals or the technicals, and they don't do a lot of combination of both. Okay. I think a lot of fundamental investors don't understand technical indicators. I'm hardly an expert on them, but I understand the important ones. And a lot of them will focus on, well, it's really cheap. The valuations and the fundamentals are supportive. And over the years, just doing due diligence on all sorts of different strategies and managers, the one consistent thing I've seen, especially with fundamental managers, is that small focus on just specific technical indicators could save them a lot of heartache in being either too early or too late to the game. I love paying attention to momentum indicators with buying and selling, because those kind of short-term indicators can really help me understand if it's the best time to get into or out of a stock, even if the fundamentals are really supportive.
Great answer. We talk about it all the time as well on this show. It's the fundies, the technicals, and but also both, because they're just tools in your toolbox. Shana Sissel, CIO of Spotlight Asset Group, as I said at the top, she's probably like one of the most positive people on FinTwit. Here's her handle at Shana S21. Seriously, like most people are not nice on the internet. You are very nice on the internet. So
I try to be. Sometimes it burns me, but I always try.
Yeah.
If somebody DMs me and they ask me questions or they're excited to talk to me about what they're doing in their portfolios, I always respond.
Yeah.
Always. I try to be real. I think that's really important. Like, I want people to pay attention to what I'm saying on the markets, and hopefully they don't think I'm an idiot. They think I add some value in that respect. But I also want them to realize, like, I'm a real person with like a real life, and some days are great and some days aren't, but I'm no different than everybody else. And so I try to be open to anybody as long as they're nice to me. I think there are definitely some people who have seen me kind of go down the rabbit hole sometimes where I get really frustrated with people, but I always try to be respectful even when I'm debating. I just don't think there's any upside to being nasty or being a troll on the internet.
Yeah, I say that as someone who's like, default is like snark, but like we should all be like 10% nicer. That would make life a little better. So Shana, thank you so much for coming on today. Really appreciate your thoughts as always. We'll love to have you back again soon. Thanks again.
Absolutely. Thanks for having me.
All right, guys, it is 9:14. Where are we on the like front? 479. Can we get to 500? Is my question. Can we get to 500? I think we can. I think y'all can do it. And that would make my day a little better. Here's a rundown of the day, everyone. After me here, you've got David Green going live 9:25 till about 11 o'clock. We've got SPACs Attack. We've got Power Hour at 1 o'clock. We'll be doing 2 streams again. We've got Get Technical with Neil, but also we've got the Apple event. I don't quite know how long it's going to go. I imagine it'll be like around an hour, but we don't really know. But that'll be 1 o'clock. The plan is to restream that. The roadmap at 2 o'clock today. If you don't know what the roadmap is, it is our new NFT show. It's been on for about a month now, maybe. There are someone in chat was talking about this earlier. There is some crazy stuff happening in NFT land. Dennis, Joel, myself, we are not NFT experts. The guys on the roadmap, though, they are NFT experts. So 2 o'clock Eastern time today, right here, youtube.com/Benzinga TV, also on Twitch, also on Twitter. And it's every Tuesday and Thursday from 2 to 3. So check out the roadmap if you haven't already. They're always talking to some really cool people. And there is a lot of money being made. It is insane. Like the numbers being thrown around. Seriously, I'm not even like the numbers being thrown around on these NFTs. It's dumb. A lot of it is stupid, but like it's a lot of money. It's kind of amazing. Anyway, so I gave the wrong Twitter handle. Oops. Did I? I'm sorry, everyone. Hold on. I was saying I gave the wrong Twitter handle. Oh, did I not type it in right? Oh, I missed a number. Sorry, guys. Here, I'll fix it. I missed a number. There we go. That is the correct Twitter handle for Shana. I apologize, everyone, who I misdirected there. 621, not 21. 621. Where is Shana's handle? Yeah. Again, very nice person. Just we could all use some positivity in our feeds, I think. So Shana S 621, not 21. There. Sorry about that, everyone. Thanks for calling that out. Whoever mentioned that. And Bob. Thanks, Bob. Appreciate that. Okay. I think that'll be a wrap for me. I think we got to most of the stuff today. Reminder, Zoomtopia, Zoom event still happening today. I saw Mitch talk about Crocs. Crocs Investor Day is today. Maybe some headlines out of them. Don't really know, but something to have on your radar if you're thinking about news catalysts. What else did I want to mention? No, I think that was it. Just watching the theater stocks again, as I said earlier. Watching tech now. The story of the morning, now that we got the CPI number, was that it was soft. It's good for tech. You want to see those gains hold, or whether they hold or whether they reverse. So as I pull up an Apple chart here, go to a 1-minute chart, right? Story of the day. is, do these gains hold or do we reverse off the open? Well, Apple sort of has its own thing going on, but Amazon maybe is a better gauge there. Facebook even, right? Microsoft, right? So watching big tech today, watching the banks as well. Very hard to interpret these numbers and what they really mean or what the market thinks they mean, right? These CPI numbers. I like what Shana said. It does give the Fed cover to do nothing, which is I think what the market wants, right? So there's that. Fuel Cell, yes, Fuel Cell had earnings this morning. Let's do that right now. Didn't cover Fuel Cell. Let's do the Fuel Cell numbers real fast. EPS 4-cent loss versus a 5-cent loss estimate. Sales of 26.8 versus $20.69 million. So an EPS beat by a penny. Sales beat by $6 million. We are trading higher in the pre-market. Oh, we're back in the $6 range of Fuel Cell. Let's zoom out, go to a daily chart, see if anything sticks out to us. Not really. Fuel Cell. I'm sorry if you're holding the bag in this. I am. This is not fun. But this is also a lesson in recognizing just when the trend has changed and when because Fuel Cell this move right from 2 to whatever what it gets to 27, right, was insane. Right, like everyone knew it didn't make sense at the time. And it didn't matter what the news was, right? It was just going to go up regardless. And the same thing is kind of the case now, right? If Fuel Cell could come out with the best news ever, but it doesn't really matter, right? Because the trend has turned. So I'm sorry if you're stuck in this one. Good report. Fundamentals are irrelevant in a stock like this, though. So, yeah. Do we have any daily support here or resistance? No, not really. It's that recent high from the second 659. That's something, I guess. Yeah. Anyway, there's your full Fuel Cell report. That's kind of it on their earnings for today. Really not much this week. ORCL was kind of your big report for the week. Antonio's been asking about BP. It's going to move with oil, man. It's going to move with the rest of the sector. I choose to look at the leaders. I look at the XLE or ExxonMobil or Chevron. Those are your leaders in energy, and BP is going to move with that, right? It's going to move with the price of oil, frankly. So that's kind of my take on that. Oh, we did fill that gap, interestingly enough, from mid-August, right, the 13th to the 16th. Next level. You got a couple. You got some level. We're actually right at this $25 area. Seems interesting because we got a high there. We got 2 highs there and 2 lows there from early August. That's interesting. Next level to watch would be that high from the 11th, right? 2610. But yeah, this chart doesn't look terrible. Obviously, we're watching for a moving average crossover here. The 50-day is your dark blue. Your 200-day is your light blue. If those moving averages cross over, that would be something to pay attention to. So, all right, it is 9:21. Everyone, that'll be a wrap for me. Actually, some housekeeping items before I go. Our next event that we're doing, our next event is actually this Friday. We're doing our next all access event this Friday from 10 to 2. But our next all day event is going to be next week, the Electric Vehicle Summit. Let me pull up the webpage for you. I'm going to go to benzingaevents.com, right? I'm going to go to the Electric Vehicle Conference Summit thing, right? on the 22nd, okay? Let's see who we got speaking, right? We've got the Senior VP of Innovation and Growth at GM, right? We've got Luminar, right? Over a dozen public companies, right? Greenland Tech, Foresight, American Battery Technology, right? Archimoto's there. AYRO is there. I'll be there. All-day event next Wednesday, benzingaevents.com to learn more. And going further down the line, our next in-person event is 1 month from today. our Cannabis Capital Conference. It's a hybrid event. It's going to be virtual and in person. I will be there. It's a 2-day event in New York, October 14th and 15th. Again, benzingaevents.com to learn more, see how you can attend 2 full days of cannabis content at the Marriott Marquis in Times Square. We were on the cannabis investing train very early on as a business. This is like our 12th Cannabis Capital Conference here. We bring together all the movers and shakers in the capital markets side of the industry, right? Kim Rivers from True Leave, right? Akerna will be there. Clever Leaves will be there. Urban Grow will be there. Sundial will be there. Slang will be there. Names that if you're into cannabis, names that you know, right? So again, cannabiscapitalconference.com. No free samples, Bill. No free samples. Sorry. It's not that kind of conference. Maybe one day. All right, everyone. Are we at 500 likes? We're at 500 likes. I'm happy enough with that. The goal tomorrow will be 1,000. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to my guest, Shana Sissel. Thanks to all of you in the chat, on YouTube, on Twitter, on Twitch. All 2,000 of you watched the show today. Appreciate you. David Green's going to be live in a moment. I'm going to end the stream and I'll redirect to him. Everyone have a good rest of your day. Good luck. Stay green. Stay filled. And I'll see you later.